Hello, good morning, and welcome to Legerity's industry panel discussion on InsurTech and Innovation, with a particular focus on how regulation is driving transformation. This webinar has been brought to you as part of Legerity's IFRS 17 program of events and publications exploring InsurTech, innovation and regulation. Our host Legerity are a UK headquartered software solution provider dedicated to the insurance industry. I will give more details at the end of the discussion today on how to find out more about Legerity and some further reading, and also the publication of an upcoming industry article that accompanies today's talk. This webinar is being recorded and there will be some time later for audience questions, but more on this later. First, some introductions. I am Mike Wilson, CEO and founder of Ditto, and I have the pleasure of moderating today's session. Some notes on Ditto. Founded in 2008, we're a marketing and business development practice focused on technology, with offices in London and Dublin. I'm also the founder of the RegTech Forum, a not-for-profit industry-wide community resource dedicated to regulation and technology innovation. I'm joined today by four leading industry voices sharing their perspectives. We've got Declan O'Rourke, who's a general manager of AIG Ireland, Mark Miller, global IFRS lead for Legerity, Brian Morrissey, partner and head of actuarial of KPMG Ireland, and Jeremy Wood, CEO and founder of Legerity. So thank you very much, gentlemen, for joining us today. Now, just some words of introduction on each of our panel members, as we've representation across the market infrastructure here. So firstly, Declan has worked at AIG for 25 years in various roles based in London, New York, and Dublin. He has a wide range of management experience in audit, senior financial roles, financial lines insurance, commercial lines, personal insurance, distribution and general management. Declan is a member of the Institute of Chartered Accountants in Ireland and the Insurance Institute of Ireland. Good morning, Declan.
Good morning, Mike.
Mark Miller. Mark is a qualified accountant with over 20 years of experience of finance change programs. Mark initially trained actually with PwC in the insurance practice. He's been involved in multiple accounting and IFRS implementations and is a global lead at Legerity for IFRS 9, 15, 16 and 17 programs. Morning, Mark.
Good morning, Mike.
And to Brian. Brian is head of KPMG's insurance practice in Ireland. He has developed a successful actuarial advisory practice focusing on all aspects of life and non-life insurance and reinsurance and the corporate pension sector. He currently acts in a statutory actuarial roles in Ireland, Isle of Man and Bermuda. Very exotic. His principal area of focus is on finance and regulatory reporting. Good morning, Brian.
Hi, Mike. How are things?
That's great. And then to conclude our panel, we're joined by Jeremy and Jeremy Wood. Jeremy has over 25 years experience in finance system and accounting rules technology. Prior to Legerity, Jeremy was founder and managing director of OST Business Rules Limited, whose accounting rules software was used by many of the world's largest financial services corporations. He's a previous winner of the prestigious Ernst & Young Entrepreneur of the Year Award and 2018 UK Technology Enterprise Awards. Well, a very good morning, gentlemen. It's an absolute pleasure to moderate today. And thank you for taking part in today's discussion and sharing your insights. So just think for our audience, let me just outline how the webinar will work today. To start, I will give a short overview on the topic. I will then hand over to each of our panel in turn, who will give us a short presentation on InsurTech and Innovation from their perspective. And we have folk from across the ecosystem. We have Declan from an insurer, we have Mark from a reg perspective, Brian from a market facilitator consultancy perspective, and Jeremy from a solutions provider. So we'll get views from across the ecosystem. At the end of the presentations, we'll have a quick summary and chat through. We then have a series of questions to ask our panel members and to chat through on adoption and barriers. We'll then sum up with a closing comment. There's also an audience Q&A, so if you have any questions, just please submit them there in the online provided, and we'll curate, and my colleague Mike will collate those and chat through at the end. We'll also invite each of you to take part in our interactive online poll near the end of the session. Okay, so let me set the scene. Technology innovation is driving huge change across the insurance industry, from customer experience, AI, chatbots, machine learning, through to leveraging cloud computing. This, combined with the need to deliver IFRS 17 and respond to regulatory challenges, means now is the time to dramatically reimagine not just the back office, but also the front office, and really front to back in these firms. The change for insurers, their employees and their customers will be transformational. So to get us underway and to kick us off, I would like to invite Declan from AIG to kick us off with his presentation from an insurer's perspective.
Thanks, Mike. From an insurer's perspective, driven by technology and globalization, we're seeing innovation in InsurTech in virtually every aspect of the ecosystem now. On the distribution and marketing side, online and mobile distribution has pretty much replaced face-to-face. And in the marketing space, digital and your position on Google is much more important now than your billboard or your how you advertise in traditional media. On the product side, we're starting to see smart contracts delivered through blockchain, a lot of proof of concepts at the moment, but moving forward. And on the underwriting side, we're seeing dramatic changes, in particular in areas like motor insurance, where telematics has revolutionized the market. The old kind of underwriting factors like age, occupation, age of car, while still important, are being replaced by real-time data to allow you to know how someone is driving, how they're cornering, braking, speeding, what time of the day they're driving, or what time of the night, and what kind of roads they're driving on. So that's dramatically changing the underwriting and giving insurers a much better understanding of what the drivers are like. And then on the claims side, we're seeing a lot of changes. For example, using telematics now, where we phone at AIG, we actually call the driver after an impact rather than waiting for a claim to come in days later or whatever. And also we're using different claims apps in different parts of the organization, so you can track where your car is, and parts of AIG are even using drones now. So really on the tech side, we're starting to see quite a lot of technology changes, but we're also seeing a lot of changes in globalization. And after decades of consolidation, corporates are more and more global. The risks are changing and increasing and decreasing in various areas. Supply chain has become more important. Things like political risk, cyber, regulatory risk around the globe. And again, AIG and many insurers are responding with innovative technology to allow large corporates online real-time access to issues like surveys globally and how recommendations are being implemented, policy issuance, cash management, regulatory compliance. And really those dramatic changes in technology and increased globalization are providing opportunities to innovate in all aspects of the process. And that's been done by both traditional companies and insurtech companies also. Yeah, I guess, look, the Internet of Things is changing everything from in virtually every industry, from a health and safety point of view, but also through telematics and the linkage of all of the different technologies. And this just gives a kind of an idea. This slide just gives an idea of some of the changes and how many connected devices there are today and tomorrow, and the impact that will have on various industries.
Well, fantastic. Thank you very much indeed. And I think that teases up nicely now to move to Mark. So from a regulatory driver of change and what's happening in the markets in response to reg change and innovation, Mark, over to you.
Yeah, thanks, Mike. So, I think there has been and there continues to be an awful amount of regulatory change, affecting all industries, but particularly recently the insurance industry. They've just come out of Solvency II, and then now we're looking at a lot of projects around IFRS 17. But of course it's not just IFRS 17, there are other things like IFRS 15 for contracts, IFRS 9 for financial instruments, 16 on leases. All these can affect insurers as well. And then when we look over the pond to our US colleagues in there's also changes afoot for life companies with LDTI changes. So a lot of regulatory change, and what this really has is a quite wide-ranging impact. So particularly on data, the way that actuarial models are run, the way you need to process information, so a lot more calculations than perhaps in the old days. And then it's affecting the accounting and the accounting ecosystem, and then ultimately your reporting, which is is a lot more onerous, I think, in a lot of these regulatory changes, where there's a need for much more transparency and detail behind the numbers that insurers are presenting. So if we just go to the next slide, I think it's easy to think about regulatory change as a burden. So obviously the goals of regulatory change are benefiting policyholders in terms of security of the insurance industry, and the shareholders in terms of transparency of information and understanding the companies. But in terms of the company itself and its operations, it perhaps doesn't obviously have a benefit other than an investment, a cost in both time and money. But really, it's an opportunity to think about investing in the areas, and with that, building a foundation for transformation. So immediately, with a regulatory change, you need to look at your data. Data in the insurance industry can often be sitting in inaccessible silo-based systems. The data may not be utilized in a very robust way, so there may be data quality issues, data availability issues in terms of timing. So a lot of issues can be sitting within the insurance company around their data, and it's the regulatory change that exposes those issues, and that's the chance to build a solid foundation, because a lot of the opportunities in these high-tech future transformational areas demand good quality data. So regulatory change is a good opportunity to lift the lid and address some of those data issues. And then obviously with these new reporting requirements, we have to look at the systems. The systems, both in terms of where the data is residing, may need investing in. So it's not all about back office systems. Sometimes it can be looking at front office systems and the way information is captured, but then how that information flows through to the reporting. What you want to be doing is upgrading those systems. So clunky, old style mainframe or proprietary database kind of systems aren't really going to allow you to take advantage of all these Internet of Things front office changes that are coming into the future. So this is a chance with regulatory change to invest in the back office, invest in cloud computing, in memory processing, all these sort of high-tech super fast things that can crunch huge volumes of information and help enable your front office transformation. And then supporting that, we have to look at process. So some of these regulatory changes involve a lot of calculations and a lot of granular information. And the way that perhaps insurers worked in the past with spreadsheets, access databases, manual processes, people operating in silos, that's not going to work. So we really need to look at automation. And that's a big opportunity in making these investments in the back offices. Then you have automated processes. So when you're implementing exciting new products at the front office, the back office can keep up, and you can get a lot of insight information from the back office teams in how the business is running. So really, with automated style processing, you turn your back office function into less of a data management style calculation type function into more an insight driven organization that can enable these investments in the front office to really pay off in terms of your bottom line. So it's not a direct regulatory change is not going to directly help you, but the investments that you make in regulatory change can really enable that transformational journey for you.
Thank you very much, Mark. And an interesting common theme with Declan's presentation too, just on these vast amounts of data, which I'm sure we're going to touch on later in today's session. And now to turn to Brian, and we've heard from an insurer, we've heard from the regulatory perspective. KPMG is our market facilitator. Brian, I'd love to get your thoughts on InsurTech and Innovation.
Yeah, thanks, Mike. Yeah, so I suppose as KPMG thinks about InsurTech and Innovation, I suppose naturally that it brings opportunity, survival, growth, success relative to the competition, but also risks. It is interesting, I was flicking through, the CRO publishes a major trends and emerging risk radar and customer behavior, digitization, technology developments, feature very highly in the major emerging trends, as well as the points Declan would have made around globalization. So these risks will manifest. There's greater focus by regulators on new models, broader stakeholders on business models, customer outcomes, reputation now is key, and then some of the emerging unintended consequences of some of this emerging technology, because it hasn't really been fully embedded. In terms of my first slide, picking up on some of the themes that we see across the rather emotive term of battlegrounds, but I suppose that is the market at the moment. We see the shape of insurance is changing, and there's lots of examples of this. We see there's a blurring between personal and commercial uses of assets. When we see trends as shared mobility, home office working, you can certainly see a shift of personal P&C and motor insurance coverage to the commercial side. Certainly that's going to happen sooner or later. And again, we see this driving more flexible insurance products, hybrid solutions to satisfy evolving customer needs. We also see risks, the nature of those risks being insured changing. Lots of examples. We'd certainly see some of the commercial insurance growth will be driven by products focusing on intangible assets. You think about data, reputation, IP, continuity. So most of these assets aren't directly insurable, or they're underinsured at the moment, or just due to the complexity of the pricing and the modeling, it is evolving. Some stats would have intangible asset values will continue to grow. So they were 15 trillion in 2008. They're expected to be 50 trillion in 2020. And again, you certainly see a significant proportion of insurance product will begin to focus on these assets. And then I suppose the focus of insurer, again, the customer, again, the focus on increased customer centricity, managing that customer experience across distribution, claims, and then services. So again, the customer experience, it's the end, it's focusing on the end client to make sure the propositions for them meet their needs, and then also deliver improved claims management experience. Because the time the customer needs the value of insurance, it is at that claim stage, and we kind of lose track of that. And then we kind of see insurers moving into solutions, again, as Declan would have highlighted, the Internet of Things, really preventative, trying to prevent events happening and enabling technology to avoid these events. And then we haven't even got to the demands placed on insurers, which are highly regulated by all of the stakeholders, shareholders, capital markets, debt, rating agencies, customers, regulator across. Nothing really to do with the customer, really. Solvency, integrity of financial information, recovery and resolution planning, accounting change. And again, as Mark would have highlighted, insurance groups generally are constrained by their legacy operating models, which impacts on data quality. It impacts then on how actuarial tools and then how processes ultimately work. So again, I fully agree with Mark that transforming that back end process has to be a focus now under IFRS 17. If I flick on, Mike, just to the next slide, if I look at the value chain recent analysis, which probably is 6 to 9 months out of date, though I think it's still reflective. Sorry, Mike, you might pick up. Hello, Mike.
Yes.
Oh, yeah, sorry, that's great. Yeah.
Just clicked on. There you go.
Yeah, great. So when I look at, I suppose, the value chain front to back office, some analysis that would have been pulled together by some international colleagues, it just tries to identify where InsurTechs are actually focusing activities and where they've started disrupting the value chain. The bulk of the activity is in the broader tech enablement space, which is probably just ideas and innovation on broader financial services now moving into insurance, and then more specifically at the front end where there's just a bigger share of dollar and where most of the margin sits. Again, we see more activity in the higher transaction areas in short-term P&C versus long-term life. But then when we look a bit more closely at, you know, the InsurTechs themselves, where they actually do try go head-to-head with incumbents, we see, you know, comparison portals, digital brokers, peer-to-peer, on-demand, digital insurers, you know, the alternative capital, self-insurance game changers. And there's lots of examples where these InsurTechs are trying to grab market share. Early days as to whether they'll win out. You can't forget about the big tech firms. They're flexing their muscles. Google, Amazon, they're all making progress. You know, the health sector, automotive, cyber, general. You know, how far will that go? And then, in speaking with global colleagues, I certainly know out in Asia, players now are more deeply involved in the distribution side. And interestingly, out there, they're not trying to compete with the traditional boundaries of insurance, but again, trying to create these broader ecosystems with insurance as one of the building blocks to enable better customer experience. They would leverage their DNA capability, their tech capability, and they'll be offering business services products to insurers. So again, I see that collaboration in that ecosystem as being pretty key. Thanks.
Oh, thank you very much indeed, Brian. That's really fantastic snapshot. And now to conclude this part, we've heard from an insurer, we've heard from the reg perspective, a market facilitator is to invite Jeremy Wood, CEO and founder of Legerity, to share his thoughts from a solution provider perspective. Jeremy, good morning.
Yeah, good morning, Mike. So thank you there, Brian, for setting the scene a little bit more there from KPMG's perspective. So at Legerity, we're a software house. We're providing applications, and I thought what would be useful is just to share with you some of the considerations that we had to make, and I think these are considerations that organizations, insurers have to be making as well when they look to the future and dealing with, you know, innovation and InsurTech. So 5 years ago, we started on the Legerity journey. This was the third generation of this type of solution, so it was a sort of a trodden path. But looking at IFRS 17, which was our immediate target to help insurers with, and then looking at the future, we had to come up with an architecture that both met, you know, existing businesses, the new standards, and then the foot in the future. So these were some of our considerations that we had to think about when we were helping insurers, and we come at very much from a sort of an accounting, finance, bridging with actuarial. So it's a sort of a traditional back office type approach. So when we're looking at the insurance sector, I guess I've been around long enough now over the last 30 years to sort of say from experience, probably the insurance sector is embarking on one of the biggest changes it ever has in the back office. And just this new accounting standard and dealing with the innovation is going to place a lot of demands right across the organization. So when we were looking at existing systems, the legacy environments, moving clients to a sort of a future paradigm, these were the sorts of considerations that we had to take in place from a technology and a solutions provider perspective. These are just a few of them. There's obviously more than just this. So, you know, it's all about, in terms of disruption and taking a client and insurance on their journey. Is it about evolution or revolution? Well, one of the reasons, you know, I guess insurers are very dependent on legacy systems is that change is difficult. So if we came to insurers with a solution that was mass revolution, you know, change everything, then that's just not going to work. They've got existing businesses to run. So a non-disruptive evolutionary approach is definitely what you have to look at from a technology perspective. The back office is in insurers is largely, I would say, a sort of a historic. It's a batch-based process currently, taking large volumes of data from policy administration, actuarial type systems. However, when we hear about the future in innovation and insurtech, it's all about fast moving things, moving more to real time. So moving the back office from a traditional, historic batch basis to real time was certainly something that we had to help them with. And then we talk about the deployment models. The cloud had been, largely proven for certainly, the social media, consumer-based purchasing. That's the way of doing things. But from a back office, still on premise is the main way. So giving a route forward on cloud was definitely a consideration for us. And then around all those type of things, you've got to look about scalability. Is the future with innovation, Internet of Things going to drive volumes massively? More on-demand computing, all those type of things we need to factor in. Security hits us, I think, over the last 6 months. The most advanced security policies we're seeing being formulated, and that's a key aspect. Modern technology to excite the millennials coming out of university. The days of these big back office systems in older technologies, those aren't the technologies for the future. And then the final thing was not just meeting IFRS 17 and coming up with standards and practical ways of doing that, but what does the future look like from a back office perspective? So what is the roadmap? What's the market driving? What's regulation? And then what is the vision? So taking those on board. And if you go to the next slide there, Mike, these were the sorts of things that we had to factor in over and above IFRS 17 to ensure that the solutions that we implement today had the roadmap to meet the demands of the future. So we call this our 2030 vision. May sound a long way away, but actually in system terms, it isn't. A lot of these finance systems and back office systems in insurers have been there for 20, 30, in some instances up to 40 years. So these are, you don't want to change this stuff when you implement. And these are some of the visions, I guess, that we've always had for finance, that it should be not just the bean counters, the number crunchers in the back office. It really should be a strategic business partner adding value to the overall business. If we look at operational things, how can we improve transformational benefits, streamline processes and lower costs? We'll talk about some of those opportunities later. Enabling innovation at the front office. So how are insurance contracts going to be delivered? Is it by blockchain? As you heard from Declan, there's already proof of concepts happening with that. How do we deal with that in the back office? How do we deal with cryptocurrencies, blockchain, these bitcoins, those type of things? And then how do we deal with the Internet of Things in terms of real-time telematics, driving more complex actuarial models, mass customization of complex products to the wider market, will increase volumes, all those type of things we need to factor in. So those are some of our considerations, and we think when you're looking at your future state architecture and you're supporting technologies, you have to have a foot in the future as well as the practicalities of delivering a standard like IFRS 17 in relatively short timescales.
Excellent. Thank you very much, Jeremy, indeed. And I'm thankful to all of our panelists for their insightful presentations. Now, I'd like us to go a little bit deeper. We're agents of change, and it's very future viewing and a 2030 vision, in fact. But I want to get a perspective really on adoption and barriers. How do we get the road to success there? Now, on the call today in our panel, we've got a perspective from an insurer, a regulatory perspective from Mark, Brian is a market facilitator, and Jeremy from a solution provider. So I'm proposing I'm going to start with Declan, but we'll go around our panelists to get their perspective on this. First of all, on adoption, and then areas that are barriers, and really for our audience to really drill in, I guess, where can the quick gains be made for adoption? What are the barriers that you have to overcome internally or with your marketplace to get us on our over 2030 vision? So starting with Declan, in InsurTech and Innovation, Declan, within AIG and you and your peers, what are the specific areas that have adopted these new technologies and techniques, and why?
Thank you, Mike. Yeah, look, I guess in any large organization like AIG, change can sometimes be difficult. I think someone equated it to turning the oil tanker in a bathtub, and maybe the insurtechs are the little speedboats zipping around us. So it always can be difficult, and in particular when there's different needs in different countries around the world. Sometimes people look for a centralized approach, others look for a local approach, and just getting that right can often be difficult. Again, you have to invest, and there's no guarantee of success. And we've seen that with a lot of things we've done here, even in Ireland, where we've gone down a road in certain telematics products and other things that just didn't work for us, and you have to just try and kill them quickly and move on to the next thing until it works. And then we're looking at a lot of with globalization and change in technology. Again, we're looking at data breaches, cyber, where the data is held. And there are a lot of issues around that, and agreements and different things, and that's even an area where AIG is the global leader in cyber insurance, and we're seeing more and more claims all of the time in this space. Again, here in Ireland, we're seeing one a week now, where people we insure for cyber are being attacked. So cyber is a big issue for that also. And then again, it's not, different companies have different structures and different barriers. Not many companies have the footprint of AIG around the world, and the strong capital position. So delivering for the world that's globalizing can be difficult for a lot of companies. So we're seeing quite a few barriers, but again, I think the industry is finding the right path, with the help in a lot of cases with InsurTech. Thank you.
Well, thank you very much. I think that if I now move to Brian, really. So Brian, as a facilitator between insurance companies on one side, working through their strategy and their strategy of moving from where they sit today to where they need to go. Where have you seen, Brian, the key areas for adoption, and then follow on from the points that Declan has made there, and the key areas that are barriers that actually need to be overcome or double convinced? Or
I suppose if I think about what would be the success factors we'd see, and I suppose you can look at those as being, well, if you're successful, that's it. But if you're not, it's also driving the barrier. I suppose some of the areas would be, being fast, nimble, and personalize the offering. So I think where that gets to is AI, machine learning, and getting on top of that to deliver faster, more personalized solutions. I think that is where it's all moving. I think understanding your customer better than competitors, and similarly measure risks better than your competitors. So again, making most and optimum use of that data you have. So that data and analytics, you just have to be better at it and continue to work at that. I think the seamless and frictional customer experience, that's where a lot of the focus is, that end-to-end, that the customer can engage in whatever way they want. And as Declan had highlighted at the start, it's all online, the call centers and stuff, it is on apps, it's mobiles, and that's what customers want. They want to engage in what way that suits them, which then drives people and technology being at the heart of the organization. The business models, need to be flexible to evolve to that new digital environment. So risks to be understood more deeply, which then means you need to be probably more connected. And then how do you embrace InsurTech in that broader ecosystem where they bring skills that the organization may not have? And then the organization itself needs to be agile, quick and nimble, so just even the culture within the organization. So they'd be the attributes as to what we would see as success. But again, if it's not successful, there's probably elements of those themes which are kind of creating those barriers.
Well, thank you very much, Brian. And turning maybe to look at it from a regulatory perspective, Mark, you know, we know insurance practitioners will have to adopt IFRS 17, but, you know, people are adopting at different rates and people are taking up at different rates. In your conversations across the market, what traction are you seeing for InsurTech and Innovation, the adoption of IFRS 17, actually using this as a transformational moment, but also, you know, where the barriers are, you know, what convincing needs to be done internally to actually look at this more than simply just ticking a box for regulation and compliance?
Yeah. No, I think that's right. I mean, I think the industry learned a big lesson with Solvency II, where they kind of dithered a bit and then ended up putting botched together solutions and didn't take the chance to make any significant investment. So that message, I think, has got across in the industry, and certainly in our conversations with clients. I think a lot of what we talk about in terms of enabling this innovation is really resonating. You know, I think one of the barriers is obviously, if you think about a full transformation, there probably isn't time for that, even with the 1 year delay in IFRS 17. So, you know, I think what we're talking about a lot with clients is a compliance plus. So putting the backbone in for foundation for transformation and not necessarily getting all the benefits right up front, but enabling that journey going into the future. And certainly we talk about making sure you invest in technology that's new and has a long roadmap. Obviously, one of the major barriers in anything like this is budget. So I think it's important to think about the business case. And when insurers are raising these topics with their boards and their executive committees, they need to look beyond the message, oh, we've got to comply, but they need to factor into the business case the penalty of making the wrong choice. So putting in technology that's still there in 20 years and is constraining the organization for many years to come. And then I think the other thing that I would observe is in our conversations is, you know, a lot of insurers really like our message. You know, we're very innovative. We have very modern technology. We can, you know, we really can drive innovation. But maybe the insurance industry is a little bit conservative and they want to stick to the older players. So I think, you know, one real message is innovation and technology is changing so fast. I think the mindset has to change, and that barrier of investing in supposed trusted partners needs to change, and they need to look at innovative new players in the market.
Well, thank you. Well, I think that tees up nicely, Jeremy, to turn to you from your experience both with Legerity and pre-Legerity is the third generation. Is InsurTech following where FinTech has already beaten the patch? Is it playing catch up with FinTech? And in terms of sitting down, speaking to the challenges your clients are facing, how ready are they to adopt things like cloud computing, which is a difficult concept for firms like insurance companies because there are legacy systems and their view of data and security, and you know, how willing are they to adopt this? And also, I think Jeremy sharing with the audience how different is selling to insurance companies now. You know, now we've got POCs and labs, and so your journey to that would be great to share, please.
Yeah, no problem, Mike. So I think it's, if you look at, you know, the specific part of the insurers that we're providing solutions to, so finance, the bridge between finance and actuarial and back office, and these guys are really in between a rock and a hard place. They have massive challenges. They're dealing with, say, the current systems which are legacy, and probably across any sector. You know, they probably have some of the most legacy systems and inflexible and siloed systems. So that's their current state. They're then faced with this massive change for the way that they account. And we haven't talked too much about the details of IFRS 17, but it really is changing the way that insurers have to account for policies and contracts and products, and also importantly, how they're going to report to the market. And as we know, the reporting to the market will affect share price. So they're in this position where they've got to have massive change. So when you then sprinkle it with InsurTech and innovation, and by the way, we're going to see rapid innovation at the front office in terms of how we package, deliver, price products for the market. They're in a difficult place. And mass change, wholesale change is probably a recipe for disaster. So we think the sensible way forward is to you've got to meet your regulations, so come up with the compliance roadmap. You don't have a time to go for full transformation, what we call digital transformation. So using what Mark was alluding to, this compliance plus. So what does compliance plus mean for organizations? Well, firstly, you've got to deliver IFRS 17 really by the beginning of 2021 to have your parallel year for going live in 2022. You can, we believe, use modern techniques, modern capabilities like the cloud to really help you deliver, these solutions to meet this tight deadline. So things like the cloud, they are proven now. You can rely on them. They are secure. It's a quicker way of provisioning platforms for tests, UAT, development, and then production than it is using sort of traditional on-premise. But have a sort of a foot in the future. So what we've seen work really well is those insurers where their compliance projects have interaction with their InsurTech, their innovation departments, which could be a subset of IT. Those guys have they have the vision for what a digital solution, a digital strategy means for the firm. And if you can take on board some of those standards, then when you're looking at your future state architecture, you're going to be building out something that will be with you for 2030 and will be an enabling platform without having to forget about compliance. And I think in our journey around the world, we get a whole range of attitudes towards this, but I think the ones where they do align this with their digital strategy, so taking back office, aligning it with what's going to be happening from a digitalization perspective, those are going to be the firms that are going to be best set for the future, and will be able to deal with competitors, new competitors to the market that have greenfield architectures, greenfield sites, and will be doing things in a new way. So, so we definitely think there's room in these programs for, having a view around how InsurTech can sort of future-proof them.
Thank you. I think that rounds off, Jeremy. Thank you very much. Really, the points Declan was making too, and I kind of closed the circle there in terms of, if you look at insurance companies today having to write risk out for cybersecurity data, businesses are changing. The Internet of Things, the vast amounts of data, the vast reliance on technology, and for insurance firms to stay competitive and to underwrite that risk and provide a solution to our problem, I guess they have to be embracing that themselves. They have to adopt that, and the adoption for innovation at the front end really begins at the back end, because if you can't process it and invest in the back office, to actually be able to properly and transparently handle this data and handle this risk, it drives better innovation at the front end. And just a quick fire question to you, Declan, how much in terms of your own governance process internally, when it comes to the tension between front office and back office, do they have an equal say at that, or how do you balance off long-term investment in a back office 30-year solution to 2030, for example, to the needs of immediate gain now for the front office and maybe customer onboarding? Or is there tensions involved in that?
I wouldn't say that there are tensions really. What you tend to have, certainly in a global organization like AIG, is a lot of the back office technology is standardized globally. And we find that, luckily enough, the local offices, country offices, don't have to worry about it too much. So we tend to focus on customer acquisition technology, making life easier for the customers. So the balance doesn't really come down to the country level. So, for example, if the company decides we'll buy SAP globally for our accounting system, it's kind of a global decision, and it's kind of done at that level. So the tension isn't huge there. We do find though that certainly middleware and databases and things like that you find that in a lot of cases, modernizing those in a large organization as quick as you need to deal with what the customer wants can be a struggle, but we get there in the end. So no, not much friction really.
It leaves actually a very nicely done question. We're getting questions in from the audience. Thank you very much, folk. If you just pop them into the form there, my colleague Mike is collating here. But this is guess I aimed at Mark. You know, with the clock ticking down to IFRS 17, our audience around questioner asks, how much time is there left to innovate?
Well, I mean, I think the compliance deadline doesn't change, but I think it's really about the choices that you make. So, investing in the solutions with companies like Legerity, where the technology is new and has an innovative and long roadmap into the future for further developments that can keep pace with innovation. So I think it's not about the clock ticking. The time hasn't passed. It's about making the right choices prior to your implementation. I think that's the most important thing.
And there was an addendum question that's just popped in. And how much scope is there leveraging off systems and infrastructure actually built for Solvency II in this conundrum?
Well, Solvency II, we think of Solvency II like a snapshot. It's like a photograph of your capital requirements at a point in time. We think of IFRS 17 as a movie, and that's why the investment in IFRS 17 is so much more important, because it's much more about a dynamic process that you need to follow. So you got away with it in Solvency II. In IFRS 17, it's really important to set yourself up for the future.
Oh, well,
Mike, just to echo, sorry, Mike, can I just echo that? Yeah, because I think that's pretty key, because Solvency II was really a risk and actuarial led project. IFRS 17 is finance, and it has tentacles across the organization, so it is transformational from that perspective. It does drive out primary financial information to the capital markets. So I think Solvency II was a missed opportunity. I don't think groups can afford to miss the opportunity under IFRS 17.
Oh, thank you very much, Brian. Well, to keep on the kind of movie theme, let's break through the fourth wall now, and let's ask our audience. We've got a short audience poll here on InsurTech and Innovation. So where's the biggest opportunity for innovation? Driving improvements in your firm, front office, operations, back office, risk and compliance. If you just press in your numbers, press submit. I think that's probably sufficient time. Mike, what's the scores in the doors? Oh, interesting, right? So the skew is still 38% to the front office, ops 19, back office 24, risk and compliance 19. So I mean, I'd like to open up to our panel members here, and maybe starting with Jeremy. If you see the skew here, it's still very much aligned to the biggest opportunity for driving innovation is in the front office. So just your sense of this poll here, and where does that stack up against the conversation you're having in the market?
Well, I think for the audience, I don't think there's any surprises really to me there that in terms of the split. I think what's really encouraging is, is acknowledgement that actually innovation in InsurTech isn't just the domain of the front office. You know, when we've looked at other sectors over the last few years, you know, innovation really takes off in the front office, and it always will in terms of making the client journey, you know, client enablement, client engagement, client experience a lot better. And that's where it has to start. But I think as acknowledgement in terms of using InsurTech and innovation to improve other aspects of the business, whether it's ops in our specifics, back office for finance and accounting, or and risk and compliance, you know, that's great. And I think that mirrors with what we're seeing globally in our discussions, that actually, you know, we can't look at any one part of the business in isolation. So I think it's really encouraging, and you know, that's a great result.
I think with 62% is actually it is in front office. And you know, Declan, when you guys are sitting down doing your investment governance, does this reflect your own view of the world too internally, just in terms of the biggest opportunities that are ripe for innovation?
Yeah, I agree with that. I think look, the front office is where is all about the customer experience. You know, people want you can see a change now from, you know, the way people bought insurance years ago in the yellow pages and going to a broker, filling out big forms, all that kind of stuff. Some people are still happy to do that, but now, you know, people are more buying online. They want to use web chat, and the future is going to be, you know, Amazon Alexa. You know, people are going to buy it through chatbots, and you know, they're going to probably drive it, you know, buy it when they're driving to work until their car is driverless, and then they won't buy it at all. So you know, things are going to continue to change. That's just life, and the front office is really where all the action is, in my mind. You know, operations, there are opportunities to innovate. A lot of operations are going global now, to hubs and you know, various AI replacing what people are doing in offshore locations and stuff like that. So there's a lot of there's a bit there. And then when you get into the back office, again, as I said, we don't see as much of that being part of a big group. And obviously risk and compliance, we're seeing more there as well. So yeah, it doesn't surprise me at all, really.
Oh, fantastic. And Brian, just to round off on this section here, Brian, just a quick couple of comments from yourself on this poll, and then we'll move into the last stages of the discussion.
Yeah, I suppose I was pleasantly surprised to see the back office as high as it was, because that tends to be where, in terms of what we see as spending, you get more bang for buck at the front end, the customer experience, the payback is more immediate, the back office less tangible, less visible. And so again, the stats don't surprise me, but I suppose it's nice to see the back office getting that focus.
Oh, fantastic. Well, thank you very much indeed. Okay, guys, what I'd like to do is just to go around to each of our panel members now, and just one closing comment. If there's one thing you'd like the audience to take away from today's discussion on InsurTech innovation, what it means for IFRS 17, what it means for the adoption, what it means for the barriers. If there's one thing you'd like our audience to take away, what would that be? Starting with Declan from AIG.
Okay, look, guys, things are going to change. There's no doubt. You need to get on with it. You need to look around the corner, see what's happening. One of our great CEOs in AIG for many years used to always say that the greatest risk is not taking one. So I think that's important here. Yeah.
Oh, excellent. And same question to Mark. One thing from today's discussion you'd like the audience to take away?
Yeah, I mean, I think I'd agree. We talk about this being a once in a generation opportunity, and so yeah, so really IFRS 17 is that chance to invest in your back office, and it will have implications 2030 and beyond.
Fantastic. And thank you very much, Mark. And to Brian, same question.
I think companies need to embrace all of these new things, for want of a word. Pretty key that you understand what you as an organization are really good at, and then look to partner with others for other areas. And I do think, 10, 15 years ago, the consolidators, they would look to outsource non-core activities. I think this is just the next generation. You're using technology to drive that in the new world.
Oh, thank you. And then the same question to Jeremy and some closing comments from Jeremy, please.
Yeah, so well, I think I resonate with the previous things, Mike, and so I think IFRS 17 has to be used as an opportunity. It's all about getting the back office in a better state for the future. Front office innovation is a given. We're at the start of that, so ensure that the back office can keep up with that innovation moving forward.
Oh, excellent. Okay, then, so many thanks to our panel for sharing some insights. For Declan O'Rourke, the General Manager of AIG Ireland, Mark Miller, Global IFRS Lead for Legerity, Brian Morrissey, Partner, Head of Actuarial for KPMG, and Jeremy Wood, CEO and Founder of Legerity. And many thanks to Legerity actually bring this event to market and for everyone contributing. To find out more about Legerity and their My IFRS 17 program, please visit allthews.legerityfinancials.com. The URL is just there on the slide. This session has been recorded and will be published on the website in the coming day or so, looking to Mike. There's also an accompanying industry article from Legerity which will be published shortly. So for more information or for a cut of today's slides or discuss any of the topics discussed there, please get in touch with Legerity through the website. Until then, just say thank you very much again to all my panelists. A fantastic session. Thank you very much to all of our audience for attending and for all those questions and for your polls. I look forward to welcoming you to the next one. Thank you very much indeed.